Snipers, you have to see what's happening to the Bitcoin price this Wednesday. I had to get this midnight emergency Bitcoin update out to you guys, as there are some on-chain metrics that nobody is talking about, and there's a lot of things happening on the charts. I know exactly what scenarios to watch out for right now, and we're gonna think like an institution, as we always do here on the Snipers channel. Remember to smash the like button for the YouTube algorithm if you guys appreciate these quick updates. But I wanna just dive straight into the charts and talk about exactly what Bitcoin is gonna do in the next 24 to 48 hours. Notice how, first and foremost, we are still inside of this range with a support of 41,950 and a resistance of 44,800. And so this has been no surprise. We've been expecting Bitcoin to stay inside of this range, and that's exactly what's happening. Now, what I really want you guys to pay attention to today is the potential scenario that Bitcoin, at this point inside of this range, has the opportunity to form a bullish inverse head and shoulder pattern. And what that means is Bitcoin can come all the way down to 41,950, test the weekly open, and potentially even test levels just below this area, and still be in an extremely bullish schematic to see a breakout above 44,800. Because at this point, what we need in order for Bitcoin to see continued momentum to the upside is a break above 44,800 US dollars. Now, here's something extremely interesting on the charts, and this is why we want to always think like an institution. Notice how there has been some extreme manipulation when it comes to institutional volume. And I say that because if we go into this hourly chart, notice how as soon as we got towards 44,800, we saw an hourly indecision candle. It's the only candle that got above 44,800, and it was an indecision candle. And guess what? When we look at the volume, it was institutional volume that caused the break in Bitcoin's upside momentum, which we all know here on the Snipers channel. If you think like an institutions, what the institutions love to do if they want to bring price higher, they like to ladder their way up so that they don't just push the price too far up where they can't accumulate at lower prices. And so they like to trick, trap, and frustrate traders by purposely manipulating price at certain levels, because of course retail isn't watching these major areas at 44,800. Retail isn't waiting to sell at this exact price level. No, that's institutional volume. So we know for damn sure institutions are the reason Bitcoin stopped moving up. Of course, we took a short position here above 44,200, knowing that this was also the potential test of the macro head and shoulder neckline. And if you guys don't know what I'm talking about, you have to watch yesterday's video. By the way, if you guys want our emergency Bitcoin updates on the go, remember to turn on those post notifications, hit that bell. That will ensure you always get our updates. But we already know institutions are manipulating price. They braked Bitcoin at 44,800. They literally pushed the brakes on the price action. And here's what's extremely interesting. Check out this headline today: how Bitcoin exchange outflows rose in January. January was the largest month for Bitcoin exchange outflows since September 2021. And guess what? When we look at on-chain exchange flow today, over 500 million Bitcoin leaving exchanges, while a measly 11 million US dollars leaving exchanges. What does this tell us? If we see more and more Bitcoin leaving exchanges, there are less Bitcoin to be sold. And so could we assume that institutions accumulated below 34,788 right before we broke out from 38,000? Of course, that actually shows confluence with the type of volume we've been seeing on the institutional time frame, because we only saw institutional buy volume at 34,788 and right below 38,000. So did they accumulate that range? Now they're starting to move over 500 million Bitcoin in the last 24 hours, net outflow from exchanges. And we saw institutional sell pressure break at 44,800 to ensure price doesn't go further up. Well, we know if we break above 44,800, what's the next target? 49,700, 50,000 US dollars pretty much. And as you guys know from our video yesterday, which was a more macro analysis about why 44,800 is so important. We're testing the neckline of an extremely important head and shoulder pattern. If we break above that, it invalidates the bearish pattern. And so breaking above 44,800 invalidates that bearish pattern. Could we assume that that is the next step for Bitcoin? Well, this is how we're gonna wrap up this video. It's midnight and I have to go back to my room here in just a second. I'm here at the Ritz-Carlton. And so here's exactly what's gonna happen to Bitcoin, and we'll wrap up here. There are two extremely important areas we wanna monitor. Of course, we know a break above 44,800 would assume that we're gonna be seeing 50,000 US dollars. That also invalidates the head and shoulder pattern on the macro. And that could be a breakout after this inverse head and shoulder tests 41,950. And by the way, this is going to be the second level we want to draw a line at, because 41,950 is extremely important. And I always want to give you guys the price level that will give us the earliest confirmation of the next major move. And I could even go as far to say that on the hourly chart, notice how we saw this bullish continuation hourly candle. If we were to just take the candle low of this candle at 42,938, so let's say 43,000, we can even get an earlier confirmation than 41,950. If we don't breach below 43,000, that is extremely bullish. But I can go as far as to say this: a hourly or 4-hour candle below 43,000 is potentially going to assume Bitcoin wants to come test 41,950. And if it's going to come there, why wouldn't it come a little bit lower? So if we break 43,000 US dollars, this is the downside scenario. If we don't see momentum above 44,800, then here's what we have to watch. It's the invalidation of this inverse head and shoulder, where we take the left shoulder, the bottom of it, which is right at 40,000, not a surprise, a big even, right? Psychological number. And so let's say this: if we break below 43,000, which is the hourly bullish candle low, 43,000, an hourly and 4-hour candle below that area assumes a test of 40,000. 40,000 at this point is the make it or break it to assume whether or not we're gonna see a break above 44,800. So this is the downside potential. And we don't want to go below 40,000 because that's the support of the inverse head and shoulder that could truly break us above 44,800 and invalidate a macro bearish pattern. Any point in time we break above 44,800, that's the green light that this is potentially a not just short-term bottom here that we saw at 33,000, but maybe a medium term or even a long-term bottom, maybe potentially the bottom of bottoms. That's going to be extremely fun to play on the charts if we see that break of 44,800, but we can't just assume they're going to make it easy on us, right? So that's what I'm monitoring here for Bitcoin. And I want to always address the 4-dimensional revolving parts of the market on this channel. And I need you all snipers to realize what we're monitoring here over the next week. And that's going to be Ethereum to Bitcoin currently staying above its monthly open and previous weekly open, but we know it's showing weakness. And is this leading the altcoins outside of Ethereum to be breaking a major support level that you can see dates back to April 2021? We've tested this level 6 times. If we break this area, we could assume fear in the cryptocurrency market. This is something we want to monitor, but just to really give you guys an idea of the other 4-dimensional revolving parts, nothing has happened to the DXY yet. What we're monitoring is a break above 95.885. If we break above this resistance, that's going to be extremely bearish for not just cryptocurrencies, but the traditional markets. If we break below the 100-day, which we're testing for a second time, that's going to be extremely bullish. S&P 500 still hasn't given us an answer, sandwiched in between the 100 and 200-day moving average. And so that's something we're certainly going to monitor. International markets, other than Japan, quite still, but Japan right now potentially in an early rescue operation to get towards these daily moving averages because it's so far and below the 100, 200, and 50-day moving average at this point. Oil cooling off a bit. And then certainly not much happening in outside parts that are in the four-dimensional aspects of this market. So here's what I'll say. If we do not see any concerns in the revolving parts of this market, as we're currently not seeing in the S&P 500, the DXY, even the VIX starting to calm down, 33,000 is a long way now for Bitcoin to get towards. We're already 25, 30% beyond that low. And so for those that have been tuned into the Snipers channel, smash the like button for the best technical analysis on the internet here on the Snipers channel. We've been predicting every point of bottoms and tops here. And so for those that took that short position above 44,000, I would be taking profits as Bitcoin has already come down over $1,000 below that entry. And so there's been a lot of profits there with our short-term volatility position that we took there with that short. But at this point, as I talked about yesterday, I think 50,000 is highly likely. Even that Bitcoin CME chart shows us the head and shoulder neckline at 50,000. So why wouldn't we come and test it if we came down to 32,930 to fill a CME gap with this recent bottom? So obviously the CME chart's being used. And with that being said, to wrap up, 44,800, 41,950, that's the range that we're playing in. We need to get above 44,800. The importance of that is we're breaking a macro structural bearish pattern, invalidating it, which is the neckline of the spot price of Bitcoin from the massive head and shoulder pattern that has developed for several months now. And then if we do come down, if they do want to start testing our patience, of course, they're starting to take Bitcoin off exchanges, over 500 million today, then we have to monitor 40,000. That's the max downside that we could see. That's the support of the left shoulder on an inverse head and shoulder micro pattern that could play out to allow Bitcoin to break above 44,000. We break below 40,000, that's when we're going to be a little bit more concerned. Then we have to watch 38,000, and then it's going to make it a lot more complicated. But if that happens, we'll update you guys. And with that, thank you all for tuning into our our midnight update. These one takes, they get tough during the wee hours of the night, right? But I appreciate each and every one of you tuned in the channel. If you support this content, smash the like button for the YouTube algorithm, and I'll see you guys tomorrow. Snipers.